All right, good afternoon, everybody. Testing 1 2 3. Testing 1 2 3. Audio check. Type of 3 in the chat if you can hear me and see my screen, please. Type of 3 in the chat. Testing 1 2 3. Hey, Kirk, how you doing? Alan, is it Mazen? Tony? How's everybody doing today? Peggy, Mark, Jim G. All right, guys and gals, how's everybody doing? Hi, Charlie. It is 4 p.m. Eastern, 3 p.m. Central here in my neck of the woods. Let's wait just about 30 or 45 seconds here. We've got some folks still trickling in, and go ahead and get cozy, get comfortable, and we'll be back here in about 30 or 45 seconds. All right, friends, I am back. It is 4 p.m. Eastern, actually 1 minute past. So thank you for joining me today. I did a presentation yesterday evening and was invited to come back. We had a lot of great feedback, positive response. Some people that couldn't make it, couldn't get in, what have you. So we decided to do this presentation once again. And frankly, I was really thrilled to be invited back to do this because you are here to see my mechanical done for you strategy, any market, any time frame. It is probably my favorite topic, or at least one of my top couple favorite. I don't have many because I actually use this strategy. I don't need dozens of different strategies, but I am here to teach you a mechanical done for you strategy for any market, any time frame. Do me one quick nod one more time since I came back on air. Just type a 3 in the chat, or yes, if you can hear me. Billy B, yes, we are starting at 4 p.m. Can you hear me? Everybody else good to go? All right, guys, let's go ahead and get started here. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. Appreciate everybody taking time out of their busy day or busy schedule, or at least I hope it is, maybe not so busy as it used to be if you're sitting at home in quarantine, but hopefully everybody is staying safe out there. Dangerous place we're in right now, so hopefully everybody's doing well, and I do appreciate you taking time to come and learn, expand your knowledge, expand your brain, learn some trading knowledge. So I'm really excited to share with that to you today. All right, thanks guys, good on the audio. Let's go ahead and get cranking here. We must always start with our risk disclaimer as required from our regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So while everybody is reading that and memorizing that, tell me where you are from. Where are you tuning in from in the world today? I am in Lower Alabama, or LA, on the Gulf Coast. And let's see, where is everybody coming from? Got Conway, Arkansas, Galveston, Iraq. Wow. I must say that could be a first. Could be a first. I had a Brazilian in last night. It could have been my first Brazilian. Tallahassee, Silicon Valley, Nashville, Milwaukee, Toronto. Always somebody from Austin, Texas in here. UK, welcome. Michigan. All right, guys, awesome. Let me go ahead and mute my phone here. Let's go ahead and get started. I don't want to waste anybody's time. Chicago, welcome. All right, guys, let's go ahead and get started here. So I'm really excited to be here. I'm going to introduce myself once again. My name is Silas Peters, and that is me standing in front of my alma mater at the University of Alabama in Tuscaloosa, Alabama, there with my 2 beautiful daughters. And 3 days after I graduated from UA, I sold my car, I packed up my small belongings, and I drove north. I drove north to the great city of Chicago, the old Windy City. Hats off to Kevin there in the chat. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And here in Chicago, I was bitten by the trading bug, and I never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large four spec traders, and the like. I've also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. So enough about me. Let's talk about you. Does anybody's trading desk look like this? Does anybody's trading desk look like this? This is actually not my trading desk. I found this on the internet a while back. Poor joke, I know. Thought it was funny at the time because I feel like this is the perception of what most people think us as traders do, that we sit in a basement, we're surrounded by all these screens and monitors and Bloomberg and CNBC, and we've got charts and lines and quotes blinking and blanging all over the place. Certainly not the case. Now, my desk did look like this in Chicago for obvious reasons, but now I pare back to just a handful of monitors for my charting, my quotes, my trading platforms, and then of course, internet and email just to manage day-to-day operations. So absolutely, it says, heck no, 2 screens max. Zane Mazen says it's like a cinnamon. Absolutely. All this does is cloud your judgment. And probably what it did for me is it just strained my eyeballs. I was going through lots of eye drops. Let's just put it at that. And what it does is it leads to paralysis analysis. So who here is a victim of paralysis analysis? Raise your digital arm if you have been or are a victim. I'm raising mine. I've been a victim. I've been there, done that, got the t-shirt. Per Wikipedia, it's the state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So I'm sure many of us here, whether you have 1 monitor or 6 monitors, you're looking at all these charts and you're saying, well, this line crossed here and this green line turned pink and all this. And then you go to your order platform and you're ready to execute the trade. And what happens? Some whiz bang indicator pops up and it is contradictory to what you thought was supposed to happen. So what we're going to do here today is going to try to eliminate paralysis analysis and teach you a very simple 3-step mechanical strategy. So what does everybody trade? I love the feedback so far. Tell me what you trade. I'd like to see who I'm talking to. You trade stocks, options, futures, forex, cryptocurrency, any or all of the above. Who's trading what in here? So we've got stocks and options, everything, all the above, futures and forex only, forex, NASDAQ, weekly options. Land says stocks and ETFs. Sorry, I'm in a silly mood. Stocks and ETFs. All but crypto and forex, right? So I trade all the above with the exception of cryptocurrency. I have accounts across the internet in cryptocurrency, Bitcoin, of course, some weird altcoins. I don't even know what I'm invested in, to be honest with you. I view it more as a lottery ticket, and hopefully I'll be able to access the account that's probably located in Cyprus or something somewhere. But I do actively trade all these markets. So good, we have a nice healthy mix there. And what I'm going to share with you today is it works in all those markets. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. Most importantly, it is simple. So we are here to keep things simple and not here to teach rocket surgery. So my agenda and promise to you is we're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to ask you, have I fulfilled my promise? And I hope to see a lot of yeses. I honestly hope to see a lot of yeses. So speaking of promises, let's talk about these promises, the $10,000 trade promise. If you are here today, maybe you read something, saw something about a $10,000 trade promise. Full disclaimer, I'm not going to promise anything, especially in trading and certainly not in life. But these were trades that we talked about, were given away in multiple free presentations for weeks and weeks and weeks because they were in the process of setting up. So as I was presenting in free presentations such as this one, we talked about trades in crude oil, RBOB unleaded gas, and natural gas. Trades that were poised to set up for a $10,000 plus trade. And that's exactly what happened. As you can see on the screen, it happened with two primary reasons, or two primary things that I use. One, the high probability strategy that I'm about to share with you today. And second, just using the natural seasonal cycles of the market. We also talked about sleeper markets in coffee and OJ. You can see here from a 5, 15, and 30-year historical price perspective, the prices tended to bottom out at this particular time of the year. Does that mean that we went and immediately bought OJ, bought coffee, went long, bought call options? No, we sat and waited patiently. These were given to you and said, hey, watch this criteria. These could be setting up and make potential moves to the upside. It's exactly what they did. They went on and met $6,000, $7,000, $8,000 per contract price objectives, and they happened over and over again. We also talked about trades in corn, soybeans, and wheat. You can see here from a 5, 15, and 30-year historical price perspective, they tended to bottom out or get quiet at this time of the year. It's exactly what they were doing. The weather was favorable. The market participants were being lured to sleep. We said, hey, sit on your hands, be patient. These markets are about to explode to the upside. It's exactly what they did. They went on, met their $5,000, $6,000, $7,000, $8,000 per contract price objective, and they happened over and over again. This webinar today is not all about futures, not all about commodities. It's just these are trades that we shared in multiple free presentations. Like I said earlier, they set up on all markets. So who here is ready to see the setup or the strategy responsible for the equity curve below? And I need, as I said yesterday, I need to update this. It's old, but I can guarantee that this is pointing even higher. So absolutely. All right, everybody says rock and roll. Let's get to it. It is, drum roll please, the 1, 2, 3 pattern, also known as the 1, 2, 3 top or 1, 2, 3 bottom pattern. Who here is familiar with the 1, 2, 3 pattern? I would suspect that most, if not all, are. I didn't invent it, but it's one of the most highly overlooked fundamental patterns in the textbook. So everybody's pretty much saying, yes, I'm familiar, not used it. No, okay, that's fine. You're going to be enlightened today. So let's talk about the setup. Let's talk about the setup here. It's price action based. The pattern is comprised of a low and then a higher high and a higher low and a break of the higher high in the case that we're going long. The rules apply to the same, but only an inverse of short. Anticipates a change in the trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or the B point. Let's talk about the strategy. Usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So one may argue, well, isn't this a counter trend strategy or a reversal type strategy? And in essence, it is, but we're going to talk about ways throughout the presentation, ways to filter out the trades to even increase our probabilities. I will stress that it works extremely well when the pattern sets up at important or significant areas of support and resistance, other high probability technical patterns such as head, shoulders, tops and bottoms, double tops, double bottoms, etc. Let's take a look at the mechanics. This is an example of the 1, 2, 3 top strategy. Doesn't matter what asset class this is or what time frame, we're looking at the very basic mechanics here. So here on the chart, point 1 is the highest peak when we find resistance. Once we find resistance and pull back, that gives us our established number 1 counting point. Market comes down, finds short-term support, retraces higher, giving us established number 2. Market trades higher. Once we stop making lower highs and pulls back, we get an established number 3. The market could have come up here, or even up here. As long as we don't take out the number 1 high, we have a 1, 2, 3. We know on 1, 2, 3 tops, we're looking to get short on breaks or closes below the number 2. Let's look at the 1, 2, 3 bottom. As you would suspect, same rules apply, only in inverse. Market trades down, finds support, giving us established number 1. Market trades higher, pulls back, giving us established 2. Once this market stops printing higher lows right here at number 3, that gives us our number 3. 1, 2, 3, and we know we're looking to get long on breaks or closes above the number 2, but we don't know what ends up happening in this particular example. All right, so look at some chart examples. We'll start here with the 1, 2, 3 top. This is a daily chart of the Aussie dollar, the 6A. And if you don't trade futures, you could look at FXA, the ETF. If you don't trade futures or ETFs, you could look at the Forex pair, the Aussie versus US. You're gonna see the same pattern. So here in the next example or two, we're gonna be focusing on 52-week highs or 52-week lows. That's not an absolute rule set in stone. You can look for every 6-month highs or lows, every 90-day high or lows. But in these examples, we're just going to look at 52-week highs or lows. Those are going to actually be the highest probability setups. So here we have a 52-week high right here on the Aussie, giving us our number 1 point. Okay, the market trades down, bounce, finds support, trades up, giving us established 2. And then the retracement is fairly shallow, but it rallies up about 4 or 5 bars and then comes back down, giving us a 1, 2, 3. All right. So we know now that we're looking to get short on breaks or closes below the number 2, which is what happens. You say that's great, Silas. Now I already know the rules, but what about the other important stuff? Where do I put my risk? Where do I take profits, or where do I put my target? The initial risk must always be above the high of the number 1. Initial target is the distance between the high of the 1 and the low of the 2 measured down, okay? So we measure from here to here. It's about 225 ticks, and we measure that down. It's 225 ticks, or $2,200 per contract. So yes, off the cuff, it is a 1-to-1 risk reward ratio, but we're going to talk about ways later on how to adjust your stops, or trail your stops using a variety of methods. But notice that once the market starts to move in your tended favor, which it does more often than not, you're able to almost immediately cut your risk in half, or in this case, by perhaps up to 75%. We start breaking down here, and we can trail our stop to the next areas of logical resistance. Let's look at the 1, 2, 3 top pattern here. Another example, daily chart of Walmart, WMT. We have a 52-week high here, which is a new number 1 point. Market trades lower, pulls up, giving us a 1, 2, 3. Again, the market could have come up here, could have come up here, even could have come up here. As long as we don't take out the number 1 high, we have a 1, 2, 3. Days go by, or excuse me, days in advance, all these days in advance right here, we knew what? We knew what 99% of traders struggle with. Where are we going to get in? Where are we going to put our risk? Where are we going to take our profits? So we know that we're looking to get short on breaks or closes below the number 2. Okay. We know our initial risk is above the high of the number 1. And we know our initial target is the distance between the 1 and the 2, or about $5 in this particular example. Let's look at some 1, 2, 3 bottom chart examples. It's a 15-minute chart of the E-mini S&P. So here on an intraday chart, we're looking for session lows or session highs. Obviously, we are not looking for 52-week highs or 52-week lows on an intraday chart. That wouldn't make much sense. So on a session low, we're looking back, we're referencing back to the Globex session. If you're not familiar with futures or Forex, they trade virtually around the clock, opening at 4 or 5 p.m. on Sunday afternoon, trading into the Asian session, then into the European session, to the US session, close down for about an hour, rinse and repeat all the way until Friday. Okay, so wherever you start your trading day, whether it's at 6 a.m. Central like myself, or it's the 8:30 a.m. Central cash open, or maybe it's the lunchtime session, or maybe only the last hour of the day, you're only looking for new highs or new lows going from that point forward. So on a 15-minute chart here, we have a new session low, market trades higher, pulls back down, giving us a 1, 2, 3. Aggressive traders would be looking to get long here on a buy stop, 1 or 2 ticks above the high of number 2, triggering you into the position. That is an aggressive entry. A more conservative or prudent entry method would be to either A, wait for the market to come back and retest the breakout area, which we did here, or alternatively is have the market come down and hook back up above the breakout area. So we come up and we hook back up above, giving you that extra confirmation. So using that entry method is going to do a couple of things. One, you're going to miss out on some potentially profitable trades. Sometimes the market will bust up here above the number 2, zip up the profit target and take off. The train left the station, you missed the trade. Don't worry about it. There's plenty of other markets, plenty of other time frames. Don't worry about it. There's always another trade. But what is it also going to do? It's going to also help keep you out of potentially losing trades. All right. So the market here will sometimes give you a false breakout, and then it will fall back off and stop you out. So this one gives you the extra confirmation, okay? I like that entry method. Here's a 1, 2, 3 bottom on Apple. Hell of a way to catch some longer term position type moves on a weekly chart. We have a multi-week low, 1, 2, 3. We also have a high probability double bottom pattern. Market bust up above the number 2 here on this large bullish candle. We trade sideways for a few weeks. We come back and retest and or hook back above. That's our confirmation to get long. How? We buy Apple stock, we buy call spreads, we buy call options, we sell out of money put spreads. Whatever your flavor or style of trading is, that is how you take action on these patterns. Let's take a look at failed trades. This is a 5-minute chart of the E-mini S&P. I like this trade. I probably took it in my live account and probably lost money. I don't know. But here is a good looking trade, 5-minute vertical action here. 1, 2, 3. We got a trend line break, 1, 2, 3 pattern. You're either getting short here on the initial breakout below the number 2, or if you wait for the hook method, market comes up, hooks back down, you're profitable by about 1 or 2 points there before it reverses. If you exercise any type of money management, you are stopped out here at the next area of resistance above the number 3. So you've cut your risk in half here. You didn't do anything, you're stopped out here above the high of the number 1. And what else do you notice? Do you see anything here? We have a new 1, 2, 3 setup. This high is greater than that high, so we have a new 1, 2, 3. Get short on breaks below the number 2 or the retest here, and it ends up being a profitable trade. Let's look at a no trigger trade or a voided trade situation. And I love when these set up, and I'll tell you why here in a moment. So here we have a 1, 2, 3, looking to get long here, but the market breaks down, takes out the number 1 low, voids the trade. We start the count over. 1, 2, 3, looking to get long here above the number 2. Market breaks down, takes out the number 1 low. We start the count over. 1, 2, 3, looking to get long on breaks above the number 2. And we actually are able to get long on this last attempt. So what is likely happening here in this situation? So anybody who can answer it gets a gold star for the day. So we have newer lows, we have new lows, new session lows, new session lows. What's likely happening? We're getting some type of divergence, okay? So whether you use RSI, stochastics, MACD, anything like that, we're likely having some type of divergence. So we're making session lows, session lows, session lows. So we're making new lows on price action, but we're getting higher lows, or i.e. no lower lows on whatever your favorite divergence indicator is. And we're going to go back and look at that. We're going to look at some live charts. We're going to see what happened today using this method on a variety of markets on an intraday basis and daily basis. So stick around, take your symbols and all that. It'll be good stuff. Let's talk about 1, 2, 3 pattern trade management. Again, a confirmation entry is on a break above the 2 or B point for a long, and a break below the 2 or B point for a short. Exit strategies: if you're only trading one contract, say one futures contract, one option contract, one forex pair, one share of stock, I would say that you should strive for the distance between the 1 and 2 points. Now, if you have the ability to trade multiple contracts, multiple shares, options, futures, really that's the ideal situation. You have the ability to scale in and out. So the distance between the 1 and the 2, the initial target, that's where you're going to look to take, say, 2/3 off, a third, half, whatever it is. Start scaling out of your position there. And then the way you trail your stop is really unique to you and what fits your style of trading or your situation. They come a dime a dozen. I like targeting good old-fashioned price structure, support and resistance levels, using basic trend line analysis, moving averages, but you could use Parsar, Fibonacci numbers, moving averages. Really, there's all kinds of things. Again, you have to figure out what works best for you. So I've showed you that this setup works on any market, whether you're trading pips and forex, Pepsi stock, pot, either potash or pot stocks, pork bellies, or the Polish zloty, and on any time frame, whether you're trading tick, 15 hourly, 4-hour, daily, and so on, and on any trading style. Are you a position trader, swing trader, day trader, scalper? I'm going to take a swig of water here. Tell me what your style of trading is. And I'm going to answer everybody's questions. Steve, you can email me at support@seasonalswingtrader.com. Laurel, I'm not sure who that is. So we've got swing, we've got position and swing, mix, scalper, all of the above. That's great, especially in this current market environment that we're in. It pays to learn, think outside the box, maybe adjust your trading style a little bit, because what may work in one environment may not work in another. But that, to me, really should be telling of your strategy. And I can assure you that this strategy is thriving in this market environment, and I'll show you the proof here. But it works even if whether we're having 5-point range days or 100-point range days. But it's good to become familiar with other styles. The point is that you've got to find out what your bread and butter, whatever it is. Mine that I found for me over the years, and how much time I can commit, my comfort level, all that good stuff, is I like the 5-minute on S&P, NASDAQ, crude oil, currency futures. Also like the 4-hour to swing trade currency futures, as well as some of the commodities, and then daily to swing trade everything, whether it's equities, commodities, Forex. That's where I got started in my trading journey, is learning to review and do analysis at the end of day. I was working a full-time job. I didn't have the luxury to look at charts on an intraday basis. So I was doing my analysis in the evenings, early mornings, place my trades, go off to the workplace, come back and see what happened. It was really the best thing that probably could have happened for me. So you've seen the proof. Let's view some real trade examples. Not to say the previous examples were fake examples, but let's talk about some examples we've used in our service. Yes, it is, Mark. Crude oil. Everybody's familiar with crude oil. Let's look at this first example here. Everybody's familiar with crude, whether you're trading crude futures, USO, maybe other energy ETFs or stocks, CFDs. You're going to see the same patterns and setups appear over and over again. So I'm going to start here over on the left side of the chart and work my way to the right. Here we have a 1, 2, 3 top example. It's a smaller 1, 2, 3. I'll give you that, but it's a valid one nonetheless. We have a 1, 2, 3. We knew immediately once we had this pattern set up where we're getting short, and that's a breaks or closes below the number 2 point. We knew where our stop was. We knew what our profit objective was. You can see it quickly met our $3 or $3,000 per contract price objective. We then went into sideways action. So somebody had called me out one time and said, well, didn't you miss this trade? Maybe I did, maybe I didn't. I'm looking at 35 other futures markets, 35 other currency markets, and hundreds, if not thousands of other equities and indices. But if you want to trade the range bound moves, by all means, go for it. Help yourself. But this is a nice 1, 2, 3. I'll give you that. 1, 2, 3. Looks like it broke above and went on and met nice profit objectives. I'm only looking for new highs or new lows, okay? So we do get a new high here. This high is higher than that high, so we get a new number 1 point. Number 1 point here, 1, 2, 3. Got really excited about this setup. Why? Because we had a high probability pattern in the 1, 2, 3 pattern, 1, 2, 3 top that we've just been talking about. Secondly, we're at a time of the year from a seasonal perspective where the market tends to break down or trade lower at this time of the year. So I got really excited about that. That's what I call the perfect marriage in trading, when I have those 2 stars align. So that's what we did. We got our confirmation here. If you missed it the first time, you've got about 3-4 days of retest there, clearly showing rejection at that level. And we got short. We shorted crude futures. We bought put spreads. We sold call spreads. We traded USO and other ETFs. Market met our $4 profit objective at $4,000 per contract, and then quickly traded down over $20,000 per contract. We didn't catch that entire move, but we caught a large chunk of it, and we trailed our stops until we either got stopped out or we had a potential reversal. So here we had a potential 1, 2, 3, another potential 1, 2, 3. Let me note this right here, this area right here. Got really excited about getting long here. Why? 1, 2, 3. We also have my second favorite technical pattern, which is the triangle. We have a very nice clean triangle right here. And then third, we're now at a time of the year from a seasonal perspective where the market tends to go higher. In fact, this is one of the best seasonal patterns in my pocketbook right here, getting long energies around this time of the year. Well, what happened? Market clearly broke down through the triangle, took out the number 1 lows, and sold off another $10,000 per contract. So being patient and waiting for confirmation kept me out of potentially losing trade. We got one flush down low right here. Finally got a last setup, 1, 2, 3 bottom. Went on, met its $5 or $5,000 per contract price objective. Let's look at gold. Everybody likes to talk about gold. This is actually GLD, the ETF that tracks gold futures. And when I look at futures or commodities, I actually like to look at the actual futures or commodities chart. So I would be looking at GC first. It's going to be a lot cleaner, a lot more fluid. You're not going to see the gaps because you're trading around the clock. But if you want to start with the ETF, that is certainly fine. But here we have 3 trade examples. We have a 1, 2, 3. Market breaks down below the number 2. We get a close below the number 2. Meets its $4 profit objective. We flip around and now we have a 1, 2, 3. We also have a double bottom, breaks above the number 2, gets a small retest, reaches $2 profit objective. Now, what do you see here? It's very similar to the crude example. Potential 1, 2, 3 top here, but it's in a range. If you were quick enough to catch that, great trade. It's a nice move to the downside, but I'm only looking for new highs or new lows. And so we start to get new lows. These lows are lower than these lows, so we're starting new counts. 1, 2, 1, 2, 1, 2. We get one gap down here. This low is lower than this low. We get a new 1, 2, 3. Market gaps higher 2 days in a row, pulls back, retest. Also get a trend line retest, and that's our signal to get long gold. We buy gold futures. We buy gold call options, sell out of money put spreads, and so forth. So this is what I like to say is, like, ignore the newsletters and things like that that you may be watching or listening to. The talking is, oh, gold's going to go here, gold's going to go there. Who cares? Look at the chart, look at the price action, and let it help dictate to where price is likely headed. Let's look at another example here on Delta Airlines, becoming probably a little redundant by now. They're just trying to hit home the fact how easy these are to spot. 1, 2, 3, $4 price objective. 1, 2, 3. This market gaps down below the number 2. I don't trade these gap situations. I do have members and students that will trade all of these setups. So they're buying put options, selling stock. I like to wait for the retest or the hook. So here we get another chance to go short. 1, 2, 3. Market trades aggressively below the number 2 breakout area. Get a small retest, ends up going $8 plus. Here we have a 1, 2, 3, breaks out above the number 2, get a couple of retests, trades higher, comes back down, hooks back up, and goes on and makes an $8 per move trade. Forex traders, here's a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we have a multi-session low. What do we also have? A double bottom. 1, 2, 3, double bottom. Again, aggressive traders are getting long here on breaks or closes above the number 2. The alternative method is to wait for the market to hook back up and through, which is what it does here, meets its 70 pip profit objective. Now we're looking for new 1, 2, 3s. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally get a 1, 2, 3 right here. Market breaks down, gets a couple retests, goes on and meets its 40 pip profit objective. I get asked all the times that work on intraday charts. The answer is of course, and especially now with the invention of the micros, the micro S&P, the micro NASDAQ, the micro RUSSI, the micro Dow, gives you ample opportunity to trade multiple contracts, scale in and out, whether it's in this market environment or dual market environments. Gives you a lot of flexibility. If you're just learning, you can tinker around with those micros, only a 1/10 of the size. Now is not the time to be tinkering around if you're just now learning. But so here we have a few trade examples. 1, 2, 3, market breaks above the number 2 or hooks back above, get your 13-point profit objective. 1, 2, 3, market breaks down below the number 2, goes sideways for several bars, finally breaks down, reaches 20-point profit objective. And then we have a 1, 2, 3, market breaks above the number 2. If you're lucky enough to get long here on the retest, you're filled on your 30-point profit objective in about 2 bars. So why are you here? You're here to learn my mechanical done for you strategy for all markets and all time frames. This is the point at the presentation where I ask you, have I fulfilled my promise? Have I fulfilled my promise to you up to this point? I'm gonna take a swig of water here, and when I come back, I hope to see a lot of yeses. All right, sorry about that. I was just talking away and realized I had not unmuted. So, all right, great. Everybody says yes. Everybody says yes. I had one wise guy tell me last night no, but sorry. So good. It's a very simple strategy. You literally can begin applying this immediately. But wait, there's more. You know, there's more. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a pending setup? That would be pretty amazing. One thing I forgot to tell you earlier was to remember the charts. I hope you remember what we just went through: crude, gold, delta. You remember those? We just went over those because I'm going to show you something really special. So here's the crude oil example, what we just talked about. Do you remember the 3 trade setups? So let's talk about what all these colors and lines mean. You're smart people, but let's talk about what these are. The green line, or green arrow here, is your number 1 point. Your red arrow is your number 2 point. Your blue arrow is your number 3 point. 1, 2, 3. Pretty simple. Now, what are all these white chevrons, these white sell signals? These are not sell signals. These are not buy signals. These are arrows showing you a visual aid, waving to you, saying, hey, we have broken or penetrated below the number 2, or broken or penetrated above the number 2. This is the bar or the candle or whatever it is that has taken out the number 2. So if and only if price action takes out the number 2 low or takes out the number 2 high, you're going to get the white arrow print on your chart, or it could be any color, which is customizable. And if and only if that happens, you're going to get these 4 beautiful lines plotted onto your chart. What do these 4 lines mean? The blue line here could be considered your breakout area or your entry level. Your red line is your risk or your stop level. This lime green line is TP1, or take profit 1, profit objective 1. And the dark green line is TP2, or profit objective 2. And just to recap, TP1 is the distance between the high of the 1 and the low of the 2, measured down. TP2 is simply 2 times TP1. All right, here's the gold example. Here's a 1, 2, 3. Market breaks above, we get our chevron print, we get our line print. Here's the sideways action right here. Here's the sideways action. Did not get the 1, 2, 3 signal in here because of my settings. Remember, I'm looking for new highs or new lows. So here's these green arrows, means that we're plotting new number 1 points, new lows, right? 1, 2, 3, 1, 2, 3. We finally get that breakout, and we trade to the upside, and you can see that we are getting potential new 1, 2, 3 top. Let me go back to that crude oil, for example, one moment. So these green arrows, what the heck is all that? These are just telling me that these are new lows. We're making new lows, new lows, new lows, new lows, new lows. We finally start making new lows, pull up, giving us a 1, 2, 3. And notice that because we didn't break above the number 2 here, we didn't break above the number 2 here, we get no arrow, we get no lines. Okay, so no repainting, none of that tomfoolery going on. Here's the Delta airline example. Here's the long setup, there's a short setup, there's a short setup, there's a long setup. All printed there for you, okay? Now, here's the 5-minute NASDAQ chart. 1, 2, 3, breaks below the number 2. We hug the breakout line there for a little bit, finally breaks down, hits TP1, TP2 to the tick. TP2 happens to also be a session low, which is a new number 1 point for us. 1, 2, 3, market breaks above the number 2, hooks back up above, hits TP1, almost hits TP2, close enough for government work, but you should have lost money there. Trade range bound, new session low. This low is lower than this low, so we get a new green arrow. 1, 2, 3. Market just nips its head there above the number 2, giving us the plot, and then the market comes back up, and it actually hooks back up, hits TP1, and as we're searching to take profits on TP2, you'll notice that we're making new session highs as well, and we finally hit TP2, and then we get a reversal 1, 2, 3 top. 1, 2, 3. Market breaks down below, hooks back down, TP1, TP2, and we're looking to form a new 1, 2, 3 bottom down there below. So is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, If you're tired of all the noise that we talked about, the indicator overload, the paralysis analysis, you simply want to simplify your process and just add a new strategy. Or if you want a very specific step-by-step mechanical plan that you can literally do part-time, okay? This strategy or this training could be for you. It's something that I shared with the folks last night that I like to say is, when I first had this built and developed, I brought my wife down to my office, who was a ballet teacher. I brought my 2 girls down to my office who were like 4 and 5 at the time. They don't know a flying flip about the markets. Trust me, they still don't even know what I do. And after we looked at the candles and the quotes and all this, and they got excited about that, I said, look, this is what I'm attempting to do here with this strategy, this indicator. And the point, they got it. They ended up getting, of course, it took some time for them, naturally. But my point is that if they can get it, they can understand it, then you certainly can too. So with that, I do have a very special offer for today's workshop attendees only. It's called the 3S Code High-Low Indicator and Scanner, and it's built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to include a chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan updates across stocks, futures, and Forex. And yes, I do limit this to 25 people because I actually manage my own support inbox. I do have a support team, but I do manage everything that comes in, and I enjoy communicating with our members and students, and there's only so much time in the day. So what the heck is a 3S Code High-Low Indicator Scanner? Let's talk about it. Let me refresh your memory. This is the daily chart of CREE. This is the 3S Code indicator plotted onto your chart. This is a daily chart of CREE, short, short, long. Here is a daily chart of BAC. Here's a long, here's a long, there's a long. Here's a daily chart of LUV, LUV, Southwest. There's a short, there's a short, there's a short. Nice, easy, clean, simple swing setups. And why do all the work? Why do all the work when we can let technology and platforms do the work for you? This is a real-time snapshot of my Thinkorswim here, where I'm scanning for 1, 2, 3 tops across the Russell 1000. Only stocks that are optionable, $20 a share or greater. Hit the green scan button, voila, I get my results. Also have a monitor dedicated to watch lists, where I'm scanning multiple watch lists across multiple time frames, multiple asset classes, and you can do the same. So we've been looking at Thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanning component. Here's what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanning component. Here's what it looks like on TradingView. I love TradingView. This is a 4-hour chart of Apple. You can see the labels here. There's a long, there is a long, and here's what it looks like on MT4. 4-hour chart of the Euro Kiwi. Here's a long setup, there's a short setup, there's a short setup, there's a long setup. Now, we'll tell you that there is no scanning component available for MT4 or TradingView. To my knowledge, it just does not exist. We do have the scanning component for Thinkorswim, TradeStation, and NinjaTrader 8. So you do get the scanning component for that, but it's not available for MT4 TradingView. As I said, if you know a Russian programmer, please send it my way. We'll see if we can get this puppy coded. Now, we know that there's no real crystal ball in the markets, but I like to view this as one that provides me a daily process, letting my platform scan the markets, locate the setups, finding the entry points, place my trades, and then I manage to trade through the exit. And you can start doing so today with the 3S code. So here is the special offer for the first 25 people. 3S Code High-Low Indicator and Scanner, Thinkorswim, TradeStation, NinjaTrader 8, TradingView and MT4, Chart Pattern Principle PDF Manual and Trading Guide, Chart Pattern Cheat Sheet, 25 Top Option Strategy Guide, VIP email support, and weekly high-low scan setups across stocks, futures, and Forex. We recently offered this online at these prices, $19.97, $14.97, $9.97, no joke. But today, for the first 25 people, we're pleased to offer this for a one-time fee of $397. It's a one-time fee, $397, gets you access to all of this here on the page. And I'm going to answer all of your questions. I love the interest. I'm going to answer all your questions, and we will look at the live market environment. So hang tight here. And let me put this into the chat. The offer link is seasonalswingtrader.com/code. It's seasonalswingtrader.com/code. Yes, you get access to all of the platforms. You don't have to tell me I want it for MT4 or TradeStation. You get access to all if you wish to do so. So let's talk about the indicator and scanner, what they include. Again, you get the visual plot of the 1, 2, 3 top and bottom reversal areas. That includes the entry, exit, stop, target levels, all color coded. Most everything is customizable. If you don't like lime green, you want puke green, you don't want red, you want hot magenta, you can change all that. You can change the look back periods to find more or less opportunities. You can scan for setups only or trigger only or both. Let me tell you what that means. When we first had this built, the scanner was built to only find setups, meaning those trades that were in the process of setting up. Had a client write in and say, hey, can I see that? Can we make the scanner look for trigger only, meaning those that have actually triggered through the number 2? I said, well, I'll go to my programmer and ask, and that's what I did. We built it out. We made that enhancement and several others and haven't charged a single red cent. You can scan for tops at one time, bottoms, or both all at the same time. Scan for intraday setups as well as swing setups all at the same time, as well as multiple asset classes. Bonus one, chart pattern principle trading manual, 90+ page PDF, additional strategies, how to read charts, option strategies, seasonal market strategies, different order types, and more. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes, whether you're trading basic calls and puts to more intermediate and advanced, such as condors, verticals, butterflies, diagonals, and such. Bonus 3, access to weekly high-low scan updates. This is something we added into our member area. We've embedded it in our member area. We do a weekly scan across stocks, futures, and Forex, find the end of day setups that are showing the 1, 2, 3 pattern. Now, you have the ability to do your own scan. So whatever platform you're using, you have the scanner as part of your platform, TS, TOS, or NT8, and whatever parameters or variables you put into your platform are unique to you, okay? So it's not everybody sees the same scan results. It's all depends on what criteria you're putting into your platform and scanning for, also based on what your settings are. Here's some proof. These are unsolicited testimonials that come in. They come in all the time. I'm humbled, but I'm most importantly grateful to see that people are profiting using the 3S code. All right. Also, here's just an example of some trades that we took using the 3S code here on crude oil, unleaded gas, the pound, euro, nat gas, and then I eat what I cook. Here are snapshots of my platforms where I'm doing my equity options trading here and my futures and futures options trading. You see I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And then one last time here, just a nice, another clean example of a 2-point S&P trade, 2-point S&P trade for 100 points per contract there. Offer link is seasonalswingtrader.com/code. All right, folks, here's the offer once again. It's a one-time fee, $397. Get access to all platforms. There's no hidden fees, no monthly renewals, no hidden billings, none of those shenanigans. It's a one-time fee. You own it. You own it for life. We'll support you as long as we are around and offering this product, but you can download it and you can drift off into the sunset if you don't ever want to talk to me again. I hope that's not the case, but you can download it and do it as you wish. I really enjoy the feedback and things like that I'm getting from students and owners of the 3S code. We've made a lot of improvements and enhancements based on their feedback. And before we go into the live charts, one member brought to my attention a strategy he's using with the 233 tick chart, which I had never used. I'm obviously familiar with tick charts, but never traded off a tick. And it's what prompted me to begin working with programmers as we speak on building an EA or robot, whatever you want to call it, basically an automated component that will trade the 3S code for me on my behalf based on my parameters. So we are very, very excited and pleased that that is being built. Obviously, it's a pretty big undertaking. We're working out all of the things, parameters, optimizations, and all of the owners of the 3S code will get a very special grandfather discounted rate into that backtester / automated program once it's released to the general public. So hopefully we are at a point in the next month. I don't want to make any promises, but over the next say 30 to 45 days, we'll have more information on that, releasing some results of the back testing and that actual program that you can get your hands on. So pretty excited about that. All right, folks, let me look back here into the chat. I got a ton of questions. Let's see. Yeah, if you have any questions that you want to ask me off the chat here, you can email me at support@seasonalswingtrader.com. Debbie, you should receive your welcome email within just a few minutes. It will have all of your login information. You get logged in, you'll see everything that you need. Yes, we can help set up. Honestly, I don't think you'll need it. We've tried to make it, quote unquote, dummy proof. I don't call anybody dummy. I'm technically challenged, but we try to make it dummy proof. So, if you're logged in here today and you're able to make it to the presentation, you shouldn't have any problems. But let's just go over here and take a gander at the 3S code. So this is what you're going to look at, see when you log in. Here is the weekly scan, weekly high-low scan updates. Once you get logged in, that are updated each week. Here's all of your resources and bonus materials. How to customize indicators, study of scans, day trading, swing trading, so on and so forth. Here's all your here is a PDF guide. Here is a video guide on Thinkorswim, a little seasonality widget there. TradeStation, V10, V95 videos and links, NT8 video guide, TradingView video guide, and MT4. All right, so that's what that looks like right there. How is it working? So let me go to this document here and show you kind of a little project that I've been doing. And you can see I've got all kinds of stats here going back to February, I believe, of last year, or was it January? Yeah, February of last year, where I've tracked results based off of a 5-minute chart on the S&P and crude oil. Those are my two favorite markets. Where again, just one contract here. This is the S&P, this is crude oil, and then this is combined. And then you can put any type of multiplier to that, 2 contracts, 3 contracts, 10 contracts, to see the profit potential. And you can see it's very meticulous. I've got all this data here going back each month. And now this month is going to be somewhat of an anomaly, because so here was February, 2,600 in the S&P, 1,450 in crude, 1 contract, or 4,000 there for both. Okay, this month so far, we're at 16.8 and 17.50. And a lot of days no setups because they just didn't trigger based on my parameters. But the 16.8, I mean, it's because we're having huge, absolutely huge moves in the S&P. In normal conditions, they're not going to be that sizable, but I'm tracking it all regardless. You can see on crude oil, the average tick move is about 30 cents, and then S&P can be anywhere, from 3 to 10 points or so. Again, it just depends on what the market is doing at that time. Let's get to some charts, and let me go through your questions. No, I don't know him. Laurel. Mike says he uses a 55 EA or EMA. Mark, this is a seasonal swing trader presentation. Laurel, I'm not sure about the 70 Jenkins and 72 mimeograph. Not sure what that is. Thanks, Kevin. Murray lines I've heard of, not really familiar with what they do. How do I select my trades from the scanner selection? It's very simple. I just go through the scan, go through, document the output. I've got the quotes, my watch list linked to the chart, so I go through every one of them, and there's different criteria that I look for. So they're in the process of setting up. Some of them will not set up. They don't trigger. They don't ever bust through the number 2. So there's that, and then I have a little small set of criteria that I use. Try to keep it simple. Let me get to chart here. The weekly high-low scan setups, they're not sent out by text email. They're just uploaded. I typically try to get those uploaded by Friday afternoons, maybe Saturday mornings, but usually try to get those done by Friday, and they're in the members area. I do have an SMS service, but not on the 3S code. I do have a separate alert service, but it's based more on seasonality setups, but also I certainly incorporate the 3S code. I've used it. I do actually use the 3S code setup in a lot of my trade ideas. What is the seasonal component? That's just a widget that is in Thinkorswim, and I'm sure the other platforms. I'm sure the other platforms have seasonality widgets as well. I'm almost certain TradeStation probably does. I just don't know. But it's a free seasonality indicator. It's based on 5-year averages, and you can just, it's neat to have that window as an extra window when you're looking at the 1, 2, 3s. Does whatever you're looking at, whether you're looking at soybeans or Walmart, does it go in line with its 5-year seasonal average? It's not a requirement. What was the last thing I said about working on regarding the scanner, any approximate win-loss ratio? So yes, we are working on an automated piece, back-testing piece. The win-loss ratio could be all over the board. I mean, you've got to understand that there are literally thousands of different variables. I mean, thousands of different variables. Not only from a technical standpoint, like I want it to get in here or there, or this has got to meet, X has got to meet Y. It all also depend highly on the human and the individual and how they trade. I don't trade every setup, and I'm about to show you why when we look at a chart. I do not trade every setup, and I'm going to show you why. But it's important to make it yours. I'm gonna move a 5-minute S&P chart on the screen. Give me a yay or nay that you can see it before I start just talking and you don't even see anything. There's no downloadable spreadsheet, Haley. The spreadsheet is embedded inside the members area. One thing we are talking about, especially during the time that we're in now, is doing like a private Facebook group or a Telegram chat where folks can go in and talk about setups, help each other. Hey, this is working. Hey, this is not working. Or hey, why am I seeing this or that? We're thinking about how to do that most efficiently. So we don't run a trade room. But it will be something that people can go in, virtually 24/7 and create a community there where everybody can help, okay, and find setups. I mean, I certainly miss a lot of setups, and I'm sure you do too. So if there was some people active in there saying, hey, check this out, check that out, I think it would be beneficial. Kevin, do me a favor if you don't mind, email me at support@seasonalswingtrader. We'll fix you up. I can't send you a PayPal. I have to do it separately because it's not an option on the form, but we can work with you there. Last week's scan setups in the members area. Yeah, we can take a look at some of those. I don't know if there are any seasonal widgets for NT8. I just don't know. You have to check with NinjaTrader. Is there a sound alarm when the trade is setting up? There is for Thinkorswim. I have alerts that go off when a number 2 is broken based off my scanner. You have to check with the other platform providers to see if they can do that. Does it work for SPY and Q and IWM? Absolutely. We'll take a look at that. All right, so keep typing in your questions here, and I know I've got to scroll back up and look at some more, but I want to make sure the folks that stuck around want to make sure that you are able to see. All right, so you see a 5-minute chart of the evening S&P. This is today's action. This is one of my key markets, key charts that I have up, and this is basically, this is one of the textbook setups. This is one of the basic textbook setups. Why? So if you can see, I've got 3 averages on here. This purple line is the 200-day moving average. So before, I'm not trying to, I don't want to confuse anybody, but this is how I trade these. So I say this is basically a textbook setup. Why? We have a 1, 2, 3. These shorter term averages are the 5 and 21. 5 and 21s have clearly crossed before we took out the number 2 low. This is the number 2 low. It broke here and it gives us our lines, right? Risk, entry, TP1, TP2. So before we even broke through the number 2, price action has already crossed through the 5 and 21, and the 5 and 21 have already crossed. So I am comfortable working sell stops already, okay? I told you that I like to wait for the retest or the hook back down, but when that criteria has already been made, I'm comfortable working sell stops. That way, in case it flushes down, it flushes down. This move was from 25.08 down to 24.55. It was like 50 some odd points in about 2 or 3 bars. One other thing I like here, look at this purple line, this 200-day. This acts like as a magnet. Now, you don't always see that. You don't always see the 200-day nestled up here against the TP1, but it is amazing when it does. It's like, hey, this, I'm just like a gimme. I shouldn't say that. It's not a gimme. Nothing is a gimme in trading, but it acts like a magnet when this 200-day is right here at TP1. It's a very high conviction trade. Now, why do I have this 200-day? Not because of that. I don't have this 200-day to give me that extra confirmation that saying, hey, this is probably going to come down here. I don't really need it for that. What I do use it for is to help me stay out of trades. So I will not take, let's pretend this was a 1, 2, 3 bottom right here, and this was the number 2 breakout area. I will not trade directly into a 200-day moving average resistance, nor will I trade into 200-day average support. And I'll see if I can, here's an example. Let's say that this was a 1, 2, 3. Ignore the big green arrows and the big purple arrows. That's something else here. But let's say this was a 1, 2, 3, and the setup would be to get long above here. I would not take that because of this potential overhead resistance. Does that make sense? So here's a trade in Europe, late European session here. Again, depending on your style, I may have not taken this trade here. We do have the crossing going on right here as we're breaking below. It's a good trade from what, 24.78 to 24.60. It's an 18-point trade. One other thing that I wanted to share with you, one of my other filters or confirmations here is this divergence. So we've got higher highs. These are session highs of the day, but we have lower highs on the RSI. So this is what I'm talking about, things that just further put the odds in your favor of an already high probability strategy. And so that's why when people ask me about wins or losses, you can't really give an answer, because I'm telling you about 3 or 4 different things that I use personally. You can see on the S&P, there's only a couple, average maybe a couple trades a day. So if you want more action, you can drill down to a 233 tick chart. Hell, you can drill down to a 1-minute chart, and you're going to get a lot more action, right? This is just here in the last chart's going crazy. This is just here in the last hour, so you can see actually this is past 3 o'clock, so you can keep going back. Here's a perfect example. right there to the 200-day. Let's look at crude oil. Let's see. All right. Oh yeah. So Bob asked about SPY. So here's a daily chart of the S&P. This is a 500-point move, basically called the top. 1, 2, 3. We're down below the 200-day moving average. We get 2 or 3 days of retest. Boom, boom, and it falls off. And look at TP1. TP1 is now basically support for this market right now. And what else? TP1. Why did I like this trade so much? Because TP1 just also happened to be the 2018 lows, critical lows there. So I'm telling you, I don't think that's by coincidence. So if you want to look at like the SPY, yeah, anything I show you in S&P can be used for SPY or even any other related ETFs. So there's a daily chart there on the SPY. If you look at the IWM, this is a daily chart on IWM. So we're already getting a potential 1, 2, 3 bottom on the IWM because of the move was so massive. You see how these averages are so far spread apart, but it did get a short right here, but this moving average was stuck right there in the middle. Let's see, I wanted to show you crude. 5-minute chart of today's crude action. So for me, this was no trade. Why? Moving averages haven't crossed. Okay. This trade was a nice trade. We have EIA petroleum report news right at 9:30. So I typically stay out of news way, 15 to 30 minutes before and after, but it ended up being a good trade, moving from 23.50 up to 24. It's 50 cents or $500 a contract. Here's a potential short at 130. I do not take it. Why? Moving averages haven't crossed. Never got any close below the number 2. You got a 200-day average lurking. What happened? Ends up being support, which is happening right now as we speak. And one last trade in the last 10 minutes of the session. Yeah, I'm trying to move through this quickly here. All right. How much is TOS per month? I think it may be free, depending on how many number of transactions. This is for Thinkorswim. Oh no, I'm sorry. TOS Thinkorswim is free. I thought you meant TradeStation. Thinkorswim is free. I would fund it with maybe a couple grand or something like that to get the full functionality. Daily chart with 3S with FANG stocks, absolutely. So we'll look at Apple. I don't day trade stocks, but we do have some people that do. Here's a 5-minute chart of Apple today. I mean, basically this is all pre-market stuff. Let's look at daily chart. So here's a daily chart of Apple. This is the last trade setup we had. We had this large 1, 2, 3 breakdown. Here was the trigger right here. Got a retest, moved from 301 down to 275. And then look at TP2. TP2 happened to be right there at 200-day support. Let's take a look at Amazon. There you go on Amazon. I like this trade right here. So you probably would have missed this because I mean the dadgum thing gapped down like that. But what we're doing here is we made these lows. Look at the RSI making higher lows. 1, 2, 3. It's coming back, or it looks like it's coming back to test this area, which it will do more often than not. What do we have at this area? Look at all this. Look at this area right here. Just for reference. So all this right here happens to be a sticky area. It looks like a 50% retracement from here to here, and the 200 days acting as support down there. So I would like to see it come back down, see how we react at that level at 1860, and see if we can take it up to 2080. Shorter term moving averages are 5 and 21. Purple line is the 200. All right, guys, gals, I've got to shut this room down. we have another event going on, but want to thank everybody for taking time out of your day. Really appreciate it. I love this stuff. I could keep going on and on and on. Appreciate everybody that joined. I'll be looking for you, your emails in the members area. If I missed anything, email me at support@seasonalswingtrader.com. I'll be happy to answer any of your questions now, or if you want thinking about something later on this evening or tomorrow, shoot me an email. I'll get back to you personally, and look forward to working with everybody. So, and really look forward to all the exciting things ahead, whether it's the EA, Telegram room, whatever that might be, and really help improving this and helping each other out. So everybody take care. Have a good rest of your day. Stay safe out there. Stay safe physically with whatever's going on, and as well as in the market. So take care. Good luck, good trading, and I hope to see you on the next update.